All right, you guys take it away. Happy Monday, everybody.
All right, welcome to the Monday Mindset and Update, Monday Market Review. So I'll, as always, pass it right over to Nikki.
Hi, good morning, everyone, and happy Monday. Not much has changed from an interest rate standpoint from last week. That 10-year Treasury bond is staying under the 4%, which we love to see. This means that interest rates can, have been dipping quite slightly down into the 5% mark, but are most likely in the low to mid sixes, depending on your situation. The big thing that's happening this week is the inflation numbers are coming in. So we expect to see a positive outcome on that, which means that the interest rate should even dip a little bit lower and see some improvement there. So all things are looking good in the right direction. There was a couple of stirrings from the Fed members talking about how they might not be ready in September to lower that rate. However, there's getting a lot of pushback, and so it's still on the docket and still like on a more than likely they will be lowering that interest rate, which is great news. So that's kind of what's going on. We're going to watch the inflation numbers this week and kind of see what we can come up with next week. From the market. So I have been watching a ton of videos and looking at a ton of information regarding condos in Florida. I know that a lot of you don't necessarily do business in Florida, but it's important for you to understand what's happening from a condo standpoint in Florida, because it could happen in any state, in any situation. So everybody remembers the condo collapse in Miami, in Florida. Everybody remembers how devastating that was. And when they started to investigate the reasoning behind this, what they found is that that particular condo and many condos around there and many subsequent condos across the state of Florida didn't have enough money in their reserves in order to fund normal maintenance and repair on condos. So what I mean by that is roofing, siding, if they have stucco, repairing that, just those general maintenance items which help with the structure of the building in general and make it a safe, secure place for people to live. Well, when they don't have those money in reserves, those things don't get done. When they don't have money in reserves and those things need to get done, they have a couple options. They can do a special assessment to homeowners, which basically says you have to pay this one lump sum within a certain amount of time in order for us to fund these maintenance items. Or number two, they can increase HOA dues in order to make up for or reach that minimum requirement for the reserves, or they can do both. So a lot of what's happening right now is Florida also passed a law that says that for any condo in the state of Florida, they have to get a reserve study done and they have to be fully funded in their reserves by 2025. So what this has done is for condos in a lot of places, Clearwater, Miami, any of those coastal places especially, those reserve requirements are going to be higher because we've had recent hurricanes, and therefore they are going back to the homeowners and saying, we need to increase your HOA dues, and we're going to give you a special assessment of a certain amount. I've heard anywhere from HOA dues going up to around $2,000 or more a month from when they were previously $300, and special assessments around $30,000 to $60,000 depending on the condo. Now, what this does is it causes homeowners who used to be able to afford a $1,000 payment and a $250 HOA due now are seeing their payments double and triple. So a lot of what's happening is they are only giving you a certain amount of time to do this because they had to get the reserve study. The law says they have to be fully funded by 2025. So they are giving you only this amount of time in order to get this amount of money into the reserves from the HOA. So a lot of people are going to start having to leave their homes, either sell them or try to sell them, or unfortunately foreclose on their homes. This is super important when we are in a situation where not only do we have HOA dues in Florida, but we have insurance issues in Florida. Now, insurance issues in Florida are directly pertaining to the hurricanes and the weather and being able to get coverage for properties because they did such huge payouts after the hurricanes that the insurance companies are either withdrawing from Florida or they're giving Floridians really, really, really expensive insurance. And keep in mind, the cost of insurance changes and the coverage that you actually get changes if it's a primary residence for you or a second home. So it'll be interesting to kind of see how this develops. We're already starting to see, first-time homebuyers that bought 2 years ago into these condo areas starting to have to face things like foreclosure if they don't have the equity in their home to make up for these special assessments and making up for that temporary increase in HOA dues. So I've seen a lot of videos talking about this. It can happen in any state. It can happen in any condo. And it's more of a, as agents, it's a buyer beware situation where look at your budget, look at your reserve requirements, look at the HOA docs, take those 10 days to view them and analyze them and ask the questions. The lender is going to have information on what they require from a reserve requirement. The danger in that is if you are putting 10% or more down, the lender only does what's called a limited review. So on the limited review, we don't ask certain questions that may pertain to the safety of the client, of the borrower in the long run, such as reserve requirements, HOA, insurance, information, things of that nature. So a lot of, lending is pertaining to, do they have 10% or less than 10% on a condo? And that's how we use, or the gauge that we use to determine how deeply we need to look into the association. It's important that you guys understand that as a realtor, taking those 10 days to review those HOA budgets is going to be vitally important, especially in the upcoming months and years, and extremely important in Florida. And a lot of this is, okay, so once we get all these condos, up to date, and we get them all, the reserve requirements are in, what's going to happen to the values, what's going to happen to the HOA dues, and how are they going to get out of this? And will they have viable, places to be? I've heard of condos where they've done these special assessments and the management company has been taken over and they are turning these condos into apartments because of the lack of reserves and people able to pay those reserves. So they're being forced to sell their condos to the management company at a reduced price because they don't have any other choices. So it is potentially a pretty serious problem. We're definitely monitoring it, but it's not a fear thing. It's actually happening and it can happen in condos anywhere. So just something to be aware of and something that I've been starting to research and see from different videos and different information that I'm getting across, the things that I look into.
Is there any option or opportunity for the investor or the owner of said building or condo association to take some of that burden, or what are the conversations around that looking like?
Yep. So sometimes it's the homeowner, depending on their equity position, may have an opportunity to do a second mortgage in order to get the reserve assessment for their own particular property done, and maybe even have some in that line of credit where they can continue to make those HOA due payments until everything is caught up. That's a possibility. There is an opportunity, obviously, for people to sell, but how are they going to sell it if they've got this pending assessment and HOA dues situation? And so it's really, can they refinance with equity? Can they pull out equity from a second mortgage? Can they, things of that nature that we're going to have to look into. It's interesting because my initial thought was, okay, so from an investor that wants to purchase property in Florida, obviously it's, there's a potential rental market there. If you say, okay, I'm going to buy one of these condos in an investment property, I'm going to ride out the HOA dues until 2025. And then once those go back down, then I can understand that I may be profitable on my property, but have got it for a reduced cost simply by the idea that this is happening and there isn't much choice, kind of that supply and demand situation. And it doesn't take care of the insurance issue at the end of the day. So it's just very much one of those things where it's like, is it a good investment? Is it not? Only time will tell. And we really have to see at the end of 2025 what everything looks like from Florida from that standpoint.
Yeah. Wow.
Yeah.
Good. Any questions at all on live stream or here? Very good. Well, that's interesting. And it can happen anywhere. And I know that even here in Minnesota, I've been hearing how one of my clients who just had to do an insurance claim on his roof because their area got hit pretty hard. They said that Allstate actually raised their deductible without even giving warning, from like $500 to $5,000, and they
Wow.
can do that. So I mean, it is absolutely happening in Florida, but it's happening here in Minnesota, and it's happening around with all the storms. And I think that insurance companies are just having to all of a sudden put stuff out there or just change policies. And I mean, change policy for some people that have been doing and part of their policy for many, many, many years. Have you seen that happening more and more?
Yes, absolutely.
Yeah.
I get calls all the time about, hey, I got my escrow statement. It looks like my insurance went up. What am I supposed to do?
Mhm.
You know, and those recommendations are, well, you can go back to your agent and you can talk about what your options are. You can shop around. And there's plenty of insurance companies out there, but specifically, there are insurance companies that, let's just say you have a roof that's 15 years old and you're being told by insurance companies that this is the increase for your premium. There are certain companies that will say, you know what, we will insure you and exclude your roof coverage, so that when you have time to replace your roof, then we can put it back on your policy, but we will insure the rest of your house without the roof coverage, which is really interesting because if you really think about it, that can drive the cost of your actual premium down. And you know, at 15 or 20 years, you know that it's going to have to be replaced anyway. And if there's no damage, or you're just saying, hey, this is just an older roof, you can help by replacing the roof yourself and then putting that roof back on your policy.
Yeah, so it's really
That can-
weighing the outward cost of replacing a roof versus
Right.
the everything going
Yes.
up and down. Yeah. Do you have, if anyone listening to this, because I know that it's on a lot of people's minds and it just keeps popping up all over the place, good resources, that if they were to reach out to you, that you could share depending on what state they're in?
Yeah,
Re-
absolutely. Absolutely. We're constantly getting good resources, information from insurance companies, you know, different HOAs, different, you know, opportunities for people with whatever they're dealing with. You know, I mean, it could be simply as someone saying, hey, you know, like I mentioned, oh my gosh, my payment went up $300 a month. I don't know what to do, you know, in my escrow, and what do I need to do? How can I fix this? What are my options? Things like that. Because although you get an escrow account statement, it is notoriously unclear as to what is actually happening when you get those statements. That verbiage isn't exactly the best, which, you know, a lot of it is legalese and making sure that, you know, people, they get out there what needs to happen. But yeah, I get a lot of questions constantly, and people can reach out to me at any time, even if it, you know, it is not a bother to me at all for people to reach out and say, hey, what's going on? How do I fix this? What's happening here? Just out of curiosity. You know, I'm afraid that this is going to happen, or I'm afraid that that's going to happen. And we, you know, advice is free, like I always say. And, you know, it doesn't, I'm not going to sit here and hound you for, you know, a load afterwards or anything like that. Questions are just questions, and I'm always here to help.
No, I love that. And I think that's a great reminder for any agent on this call to think about. This is another exact reason why you should be reaching out to your sphere, your past clients, your friends, your family, anyone. It's a great reason to reach out to them because it is happening. It is real. Check in with them. Have you seen this? Maybe you know, or you've heard of this going on. I just wanted to, as your agent, check in and see if you've been impacted by this, or no, if you are, to reach out to me. I can help you get connected with resources or people that can look at maybe where you're at equity wise in a position, or even just your policy, and get you in contact with people to make sure that you are, again, like I tell buyers, you'll either find out one or two things, one of two things. Either you're exactly where you should be and not much will change, or there's other options and opportunities out there for you to maybe partner with a different insurance company or do something with your current mortgage. So absolutely be the resource, all around holistic resource. And this is a great opportunity, absolutely, because in Minnesota as well in Florida, I can't imagine how many other states as well are feeling this. It has to be across the country.
Yeah, and I was dealing actually with another condo in Minnesota earlier this week, where the client had purchased the condo, and she looked into the budget and the reserves after she had purchased, and it turns out that the condo association had $0 in reserves. They had like, okay, I shouldn't say zero, 1,600. So but she actually got herself on the board and has been helping them to correct the situation to help get those reserves up, because they just didn't know. They just didn't know what they should be doing. Nobody on the board understood, you know, things of that nature. And so it just takes a person that really understands what's going on and can help with a management company to say, okay, get a board of members of the HOA, in other words, a board of homeowners, and have you guys start making decisions on what needs to happen here so that your HOA is healthy and it doesn't affect you in a negative manner.
Yeah. Absolutely. And those are all good questions and good things to think about as you're reviewing the documents. So as the agent, don't leave it completely up to your clients to review those documents, because if they've never bought or purchased into an association, they're not knowing what to look for. Or is it a well-reputable management company, or is it ABC management that you have no idea? Any of this. I mean, all really good questions, really good things to watch out for. Thank goodness she went into solution mode and now she's part of the solution, but not everyone is that forward thinking. So definitely do your due diligence as the agent, help your clients when they're in this review process. And then if they do get this notice, reach out to Nikki and find out what solutions there may be for them, whether it's insurance wise or selling, anything to, help, even if it is having to sell, maybe it's getting in front of the right investors. I mean, Nikki, you have the holistic approach as well, not only with mortgage, but you have a lot of different hats you wear that can help with any type of those situations for sure. Yeah.
Absolutely.
Good. Well, any other questions?
So has anybody done anything with communicating with clients, leads, prospects, database, sphere of influence regarding the interest rate shifts? Have you been out there reconnecting with people? Because I heard that the drop brought in like 2 million more buyers throughout the United States. And if it drops again, there's going to be a lot more. So how are you getting your fair share of the 2 million? You only need a few of those to make it make sense in your business. So has anybody done anything? What have you been seeing from the lead generation perspective, Nikki, as the lender? Have you been reaching out to people? Have you been seeing people come back kind of around that were on the fence?
Yep, absolutely. So I'm seeing what I did particularly for my database is I went in and I just basically tagged everyone by interest rate of where they were at from when they purchased. And then obviously put alerts out there and talking to people and having different conversations as I see things come across, as I see things on Facebook, things like that, and just reaching out to people and saying, hey, here's where we're at from an interest rate standpoint. The media is saying this. Although that may be true, I want you to, let's just relax and wait a little bit and see what happens in mid-September is really the message that I'm sending to people. As far as leads that are coming back around, just using my database to pick out those prospects that I had engaged in a loan conversation or a loan application with over the past year that hadn't bought yet for whatever reason, and in re-engaging them and saying, hey, FYI, interest rates are lowering. We expect a larger drop in September. This may be a good time for us to relook at your situation. And I've been getting some really good responses with that and people saying, yeah, absolutely. Reach out to me mid-September. I've been getting phone calls where it's like, oh, I heard on the news this, that interest rates are lower. And so just continuing to have those conversations and using that database that I have built up to really just say, okay, where are we at with everything and who needs, more attention now that there might be opportunity for them to purchase.
Yeah. And what I found too with that is when you are reaching back out and it's been a few months or maybe even a year, 2 or 3, call, leave a voicemail, email, and text. And so they will respond the way that works best for them. I've found honestly, 19 out of 20 times I will get a text message back before I'll ever get a call back. So absolutely, at the very least, call, leave a voicemail, and then immediately send a text message. And that's a way that I've been able to re-engage with past clients, whether it be agents that I've been partnering with or clients that are looking to buy, sell, or invest. So I think it's just finding out and meeting them where they're at and knowing a lot of people aren't going to pick up the phone, especially until the need is right now, but you can start engaging definitely in text messages or emails as well.
Yeah, I agree. And then depending on how large your database is, it might not just need to go out to people who were looking in the last year. You might just be calling people on a general mess. If it's a manageable amount of people in your pipeline or a manageable amount of people as prospects, it might just be calling, just saying, hey, here's where the market is, and offering just value that way. Even if you aren't saying, oh yeah, they are more likely to purchase. It's calling anyone and everyone that you really have time for and engaging them. Because like you said, even if it's not right now, it might be 6 months from now. Yeah. And just keeping them informed on the market, showing that you care.
Good point. Absolutely. Love it. Good.
I love it. So you guys keep watching this. Obviously, September is kind of the next date to watch, right? Do you think anything's going to change with interest rates prior to then?
Maybe this week a little bit, but I mean, we're expecting, like I said, another major drop in mid-September. So
yeah. So things hopefully will maintain. So get out there, talk to your people, see what it makes a difference for them. If they've been on the fence, this could make a difference in what they can afford, what they're approved for, what their payments are. Talk to your lender, talk to Nikki about that. And then, you know, we'll be watching this closely, but every Monday we come here, we talk about what's going on. This was a really good conversation around homeowners associations, around insurance. This is actually affecting people in different parts of the country. Where we are in the Pacific Northwest, there's some flooding things in certain areas by lakes. There's definitely fire challenges. And so therefore, you know, we've been seeing, you know, a lot of people being declined for insurance because of that. And so, you know, it's relevant. And then what happens when people need to get loans, and how do we navigate that, and what options are there? So I love these types of conversations, because the more we know, the more we can be out there educating our client. These are really great little videos you can even do. Hey, if you have any questions on this, reach out to me, you know, things like that. Hey, did you know? These are really, really great things. It doesn't always have to be about buying, selling, and investing in real estate. It can be about home ownership challenges or things that are changing in home ownership that make you the expert. So, you know, continue to take this information and share it with those that you know, because this is how you're going to stay top of mind. And mind share is the way that you continue to get business. So Nikki, Angie, as always, thanks for bringing information. You guys, we're going to let you go. We keep this short and sweet so you guys can get off on your week and go talk to people. Invite your friends if they could get value. This is open to anybody. It doesn't have to be with any specific brokerage. So feel free to invite anybody that you think could get value. Thanks, you guys. And we'll see you back. Anybody who wants to be on the 1 p.m. Eastern call on Wednesdays, we've got a great panel showing up from all over the country. That would be 10 Pacific, 11 Mountain, 12 Central, and 1 Eastern. And if you don't have that information, reach out to me in work chat, text me, call me, email me, and I'll make sure that you get the information. So that's the next call this week. Also live streamed in EXP Family Tree. If you can't be there, you can watch the live stream live, or you can watch it later. We live stream that call as well. Thanks, you guys. See you soon.
Have a great week.
Bye, guys.